I tell you, with the small cap collapse, is it finally going to just tear down the other indexes? Is inertia going to take over? How are you going to protect your profits? Should you protect your profits? Let's take a real quick look at the chart and see what's going on with the Russell. One of the things I find very interesting about what's going on with the Russell right now is we had a reversal signal about 7 days ago, the shooting star followed by a candle to the downside. This is considered an evening star formation, or really darn close to one. And then we've continued to sell up. Notice that this trend line has been broken to the downside. But the thing I think Anil is really telling is price actions today, while the market was all excited and everything was running up, price actions today hit the 8-period moving average right there and started selling off, thus telling us that, yeah, the Russell may be the stick in the mud. And as I said, that will pull down the rest of the markets. At least that could happen. And so, what am I looking at this? Weekly chart. Huge bearish candlestick, not quite a bearish engulfing, but pretty darn close. It is an outside week. Again, another side of weakness. Look at what's going on with the momentum. The momentum has now crossed to the downside. The last time it crossed to the downside like that, what happened on the Russell or the IWM? It fell all the way back down into this area here. Am I expected to fall that far? Not really, but it could target the middle of this magic fib box about the 184. And then if that then triggers the Fed reducing rates and all this kind of stuff, because right now the Fed's going, yeah, we're not going to reduce rates. And it's going to drive the small caps nuts. And eventually, again, the small caps will pull down the other indices. And so that's what we're sitting at going right now. One of the reasons I do concentrate on the indexes is because they give us a real good picture of what the markets are doing. I focus a lot on the Russell. I think the Russell provides us a better idea of what's going on in the underlying economy because it's not a weighted average. But we'll be taking a look at that as we see Russell really pretty move all the way up into the 8-day moving average. And now it's rejecting off the 8-day. If this continues to fall back down, watch the fall down close to the 50-day moving average right there. We take out the 50, then stand by. Next destination is going to be back about 191 to 192. But let's take a look. What the heck's going on with the spiders? SPY representing the S&P. Classic move we're seeing today. And I want to, as I spoke earlier, this whole move yesterday on the S&P, Anil, was actually about 2.4%, which is pretty significant. And I think I was looking at the leveraged ETF on this, where it was about 6+% the total move. So today we are getting a reaction rally back up into the midsection of the big red candle there, which is absolutely normal. The midsection of a big either green or red candle turns out to be a very significant level of resistance and could push the prices all the way back down. Notice the 8-day moving average is tilted down and we're struggling to get back above it. So we'll watch that through the end of the day. On the weekly chart, let's take a look over here on the S&P. The big thing on the weekly chart I'm looking at is what's going on down here with the momentum, especially the TSI. Also keep an eye on the RISI. The RISI looks like it's doing a little bit of a 1, 2, 3, a head and shoulder type pattern. We break below that purple line. Watch out for a move to the downside. One of the things you can do if you want to get better at your trading is take a look back to the last time our momentum shifted to the downside. It'll give you an idea of where prices may go if we have a symmetric pullback to what we had previously. So how do I do that? I'm going to jump in here, grab the Fibonacci retracement. I'm going to go from high. So there we go. Now we have that in place. A 100% pullback that would be symmetric with this pullback over here, if you're not used to seeing this, would take us down to this level. Look to your left. And isn't that interesting? That's right in the zone of support where prices went on and rallied from there. So actually, that's a really great place to go. I'll be looking for a somewhere between the 78% retracement, could overshoot a little bit down to about the 469, but that's what we're looking at for the S&P. What about the Qs? QQQ representing the Nasdaq. Now, I was watching this earlier this week and I was going similar type action, almost identical twin kind of pattern that we saw on the S&P is showing up here. And price action pushed all the way up into the midsection of the big red candle and it fell. Now, this big red candle, that is a huge outside day, but in reality, it goes back to there was the original reversal signal, basically as a kind of a double type formation, not a real technical double top, but certainly got back up into the past resistance area and reversed down. That was a huge signal. And then we get our first close below the 8 here, which was a confirmation. Then a huge rally on Thursday, which was really shocking. Basically, we opened Thursday, we gapped up and opened up there, but all the way fell from the sky. You know what? So let's see how much of a move did that make? That was the full move from high to low was again about 2.5%. So if you're looking at trading one of the leveraged ETFs, you may want to look at either I would look at the Qs or TQQ or the Russell IWM. In my research and my study, it is shown, I have shown that the NASDAQ is the most prolific in providing the better return, better than the S&P and also the better than the Russell, but the Russell's a really close second. Anil, what's your thoughts?
I'm going to start with Russell
Yeah.
and IWM. And I'm seeing interesting thing on my triple screen weekly chart, which says in spite of the up and down that we see in the routine daily charts, this weekly was telling me that the buy signal that came on December the 4th has
Which is back.
still not gone away.
Okay.
And the MACD also has still not gone away. The signal on the MACD cross.
Okay. Has the back-D histogram started to roll over a little bit, though?
Yeah, it did roll over, but the signal that I got around December the 4th is still intact, even on MACD.
Okay.
So that's caught my attention and makes
And
me
so
more hopeful. We'll see what happens.
that's just it. We will see what happens with that. And just a real quick highlight, there was last year's ebbs and flows of our P&L. Here is this year's ebbs and flow. I was really trimming up this nice one, up the 40% line on schedule, on time, maybe even ahead of schedule a little bit. And then yesterday happened. And the thing about it is that I love about my system is that it's all fire and forget. And the orders are out there to protect you. And we have things in there in place. And so I was busy working other stuff in my office and all that kind of stuff. And the system automatically pruned my weak hand, part of the weak stocks that I had. They're gone now. My list of stocks is stronger than it was before. Plus, I have room to add when things start to take off. So that's what's going on with that. Let's talk about some stocks. So my big question for you guys is this: is Tesla the next Enron? Pow. And a lot of people, they go, "Oh, no way." Back in 1999 and 2001, do you realize that Enron was the darling of Wall Street? Its share prices were rising. Fortune magazine called Enron America's most innovative company. We heard those words before, but before we get into answering that question, we're going to kick off, and Neil is going to get us going with NVDA, NVIDIA. Okay.
It's in the news, and people these days are talking about whether it has run up too much and it's time to get out or stay in there, or is it going to continue doing that? And I've been following this stock quite a bit with my system and some new thinking. And based on that, the way it's holding up right now with its indicators of accumulation distribution and the up down volume ratio, when I'm coming out, the stock is still not done.
Yeah.
And when it gets done, you will start seeing that in the accumulation distribution
And
way
so make more.
the comp rating and other things.
So are you actually in it?
Now, I got out before actually. Now, while I was in India, I had a tight stop loss and it kicked me out one day, but I will get back in. I don't think it's still done yet.
Yeah. I like it. I wouldn't buy it right now, but I think NVIDIA is going to continue to be a power player and all that kind of stuff. Oh, did you know that NVIDIA it came out on a list for IBD, the top 17 strongest stocks that you want to trade. And its running partner on that is one of the ones that I'm liking, and that is ARM. And ARM, again, the same industry group as NVDA. And the thing about it is, let me pop this up over here so you can see that. Look at number one rank. And it is basically, look at all that green showing up here on ARM. I like ARM because it's a newer entity. It has basically launched off like a rocket ship, and now it's come back consolidating very nicely, maintaining above the 50-day moving average. And full disclosure, we are in our AutoPilot trading members. We are in a small position on ARM just this past week when it came down here and retested on the bottom side of that base. Looks like momentum's getting ready to shift to the upside on the daily charts. A little bit of conflict, the momentum on the weekly chart, because it looks like it's crossed down, but it's just driving sideways and holding up so darn well. So I like ARM. So what do you think about ARM?
Yeah, looks like it's finding support at the 50-day line. In my system, it had a sell signal on the daily.
Okay.
And if it's finding support at 50-day, maybe it's a good thing. So would you buy additional ARM here or wait, or what would you do?
Because the market was not in correction, but under pressures clearly. And IBD had said, hey, reduce your exposure. We went in for a partial position. When would I buy more? If the momentum shifts back around, or if I didn't already have a position, I wouldn't feel bad about buying at 121 or so. The other thing is, once we break above the 8-day and it closes above the 8-day, then I'd look for pullbacks into the 8-day because it's holding up. As I said, it's holding up there and it's holding up above the 8-week moving average, which is all positive. And the two different part of the answers is, one, I'm already in it for a half position. I'll look for a breakout to add to bring it up to a larger position. And the add-on may not be another half. It may just be a quarter position, if that makes sense.
Okay, thank you.
SQQQ. Let's talk about inverse leverage ETFs. Do you know that TQQQ is one of the most popular leverage ETFs out there to trade? I think Floyd, my buddy up in Alaska, and ourselves with the AutoPilot Traders, we have done a darn good job of trading this and over the last few years. It is just amazing. I've got a video over on the YouTube channel that talks specifically about how well it has done compounding. This sucker compound, not this sucker, but TQQ compounds at better than 100% per year. Now, SQQQ is the leveraged inverse ETF. I'm looking at that just in case the market continues to just go down. Where would I want to be a buyer of this? Right. It's coming down and testing the 8-day moving average. And I don't because but I don't want to be a buyer right here yet. I would have no problem buying it. Let's say I could buy it at the 8, but I'd want to know on how much a loss would I have all the way back from the 8 down to the this last swing low over here. It's only about 6.18%. So I'm pretty much in my boundary to be able to trade that. So I may look at that next week. The telltale sign, if I really want a strong confirmation, is get a close above the 8-week moving average and then buy on any pullback to the 8-week moving average. So that's what we've got going with SQQQ. Neil, are you trading TQQ or any of the leverage ETFs?
Yes, I do trade TQQ, and I'm following the triple screen system. The weekly is just behaving beautifully.
Okay. So now, are you out of it right now or are you
No, I'm in it.
okay? TQQQ?
Yes, I've taken some partial profits, so
Okay.
it's fully in, but I'm in it.
And so I want everybody to listen to what Neil just said. He's taken some partial profits, which is very important to do with all of the, especially the leverage ETFs. Not a darn thing wrong taking 10% or 15%, 20%. Pull some of those profits off the table because if it reverses hard, it can, in fact, just rip your face off. Let's take a look at Tesla. And here's one of the things that I keep saying about Tesla. Okay, and I'm going to show you a monthly chart. So does it I'm not gonna say, "Gee, it looks like Enron," or anything like that. However, since basically this is the July of last year, we have been in a hard downtrend on Tesla. It has some target areas, 118, 101, and all the way down here at about $65. Could we fall that far? Yeah, we could. You do the technical measurements, they all measure out. I'm going to do one technical measurement right now to give you an ideal on that. And I'm going to go from this low up to this past high. Look at the 1272 extension from there is all the way down here. The 100% would be about here. And if we take out that low right there, how far is Tesla potentially? Again, this is a straight technical. How far could it fall? There we go. As you can see, if that technically takes on, it's going to put us down way low, back down to about $10. And I'm not saying Tesla's going to go there, but keep in mind, it's a technical target. Now, I do believe that, let me go back to the weekly here. I do believe that Tesla does have a nice potential downside that if we break and close below this, and we already broke through it one time, but everything is in gear to the downside. As we break out the bottom and close below the downtrending channel and then take out the 152, then I think the 118 and then the 101 is definitely in the sights of where we could go. Yeah. The part of the reason why I'm saying this, and just to be clear on it, is because from what all the analysts say, Tesla isn't even looking at a potential turnaround until 2025 or beyond. And so some of the forward-looking estimates for earnings for the next year and a half, they look really poor. Anil, to make a long story short, I'm not buying Tesla right now.
Okay. And on my system, on weekly triple screen as well as monthly triple screen, there are sell signals. So it's not good. When I get a sell signal on a monthly, that means something's really going on.
Yeah, that's without a doubt. Okay, cool. So that's our stocks for this week. All the things that Anil was mentioning, I was mentioning, are things that you need to capture and get into your journal. And so we've got a really great journal. It's the AutoPilot Trading Journal. You can pick it up on the Amazon, and I will put that link in the description. Remember, folks, that all materials presented are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance.